G'day everyone, welcome to this rundown for global and Australian stocks for the 26th of April. And it was another good week for stocks, pretty much all around the world. Good gains in America, certainly good gains in Europe, and not a bad little gain in Australia either. So let's have a look at the action for last week. The S&P ended up 36 points higher for the week and finished very, very close to an all-time high. In fact, it may in fact have been an all-time closing high. We'll have a look at the chart in a minute. Now, the interesting thing is that across the board in the S&P 500, earnings are actually down. So finally, the effect of the strong American dollar is having an impact, and earnings are down by just under 4%. But the reason that stock prices aren't falling is that analysts had brought their forecasts for the quarter down to such a degree that 3/4 of the stocks are still beating expectations. So that's why the market hasn't kind of fallen apart. It's not as though there was a lot built into the price of the stocks. That wasn't the case. Now, any short-term disruption to stock prices, I believe, is going to come from Greece. There is a crunch time coming for Greece in the next basically few weeks, unless it gets pushed out a little bit, but it's quite imminent as to whether they can repay money to the IMF. So that is something that could cause some significant short-term disruption to stocks. I would expect that it will only be brief. It'll only be based on sentiment. It'll only be based a bit on panic, because the Greek economy is really too small to have any real impact. But nevertheless, it could. Now, the bond market and the VIX index suggests that there's no change in trend, and it suggests that there's no real fear about what's likely to happen with Greece. Certainly, very mild reactions in both those markets. The ASX 200 ended up 56 points on the week, and that was pretty much all on Friday. Now, it may keep moving higher, but the risks are really mounting in the Australian market because our economy is clearly slowing. Now, there was a little bit of a recovery in iron ore and hence iron ore stocks, but a lot of that is because so many people were short, particularly stocks like Fortescue was very heavily shorted, and with the price starting to move up a little bit, the people that were short are now reversing that position, and so there's a bit of a short squeeze going on. Don't buy into that in terms of a new uptrend, because I believe the fundamentals for iron ore are going to dictate that iron ore is probably going back down again, and could significantly go down significantly more yet. And also, I'm not too convinced about oil either. Oil's had a bit of a recovery recently, but I can't see that things have really changed much with oil in the last few weeks. We've still got a fairly significant oversupply. And I guess for Australia, our balance of trade, because of the commodities, our balance of trade is a huge issue now, and it's going to become more and more so. So I think our economy is in for probably a recession, and that certainly won't be good for a stock market where you've got so many stocks that have been pushed to historical highs. So let's have a look at some charts, and we'll start first of all with the S&P 500. So you can see that where we closed there is pretty much in line with the all-time closing high, 2118. So we've still got this very strong uptrend in place in the S&P 500. Let's just look at that on a monthly chart. So you can see absolutely no change in trend there whatsoever. Now, if we look at the actual VIX index, you can see that we did have some significant spikes here in January and early February, some very big spikes. But we're back down now to 12 on the VIX, which again is really down at the very low levels. So there's really no fear in the market whatsoever. Now, part of the problem with the US market has been the strength of the US dollar. And for the first time, the US dollar closed below the 150-day moving average, which is this blue line here. sorry, the 50-day moving average. So whether that's significant or not, whether this is just a consolidation and it's going to head back up again, I guess probably depends a bit on what's happening in Europe, and also depends a bit on the perceptions about what the US Fed is doing with raising interest rates. And that's why the US dollar has come off a little bit, because people are now starting to think that maybe the Fed won't reduce interest rate, start to raise interest rates in the near term. Turning now to the ASX 200. You can see we had a spike up on Friday, which put the index back into the black for the week. But other than that, it was down. So still sitting in this very lengthy period of consolidation, and really it's hard to justify based on fundamentals that the index would be above 6,000 points. Turning now to commodities, gold was down by $25 on the week. And we've still not seen any real move in gold stocks. They're stuck. And as I've been indicating now for quite a number of weeks, just to remind you about what it will take to get gold on the move again, we either need to see the US dollar start to turn down. But it's interesting, with the US dollar down last week, the gold was also down. So those two things are not necessarily linked as well as you would think they were. The other thing that, of course, would be an improvement for gold would be some sort of system failure, financial system failure, which perhaps could be related to Greece. If things got a little bit wobbly over there, then that could have an impact for gold. But that's really what is going to be required to get gold on the move. Copper was steady at 274, so the price action there has been extremely limited. The reason that I mention copper each week is that it's a good barometer of what's happening globally in the economy, and the fact that it's below $3 indicates that things aren't too buoyant. But because it's steady, it's indicating that there's no real great issues either. Now, West Texas Intermediate crude was firmer to $57, just up $1, and it's still sitting right at a key resistance point. And we've still got plenty of people now that want to tell you that oil has bottomed out, and it may well have, but I don't know that it's necessarily going back into an uptrend either. The fundamentals just really don't support that at all. There's the spot copper chart. So let's just take a look at the gold chart. This is gold on a daily basis. So you can see it was a fairly sharp fall on Friday night, and if we now switch to the weekly chart, you can see that there's still a bit of a downward bias, very slight, within this overall phase one base that's been forming now since about June of 2013. So we're getting up close towards 2 years on this very extended basing pattern. If we look at the one of the gold stock indices, this is the HUI, and you can see there's still really no resolution of what's happening with gold stocks. They're just really bobbing up and down in the one place. So just to finish off, overall, stocks are really in what I would describe as an ideal environment with effectively zero interest rates through much of the developed world. And we've got a lot of stimulus happening, and in most areas we don't have excessive valuations with stocks. April always tends to be a stronger month. We're drawing towards the close of that now. Whether we'll get a more adverse effect in May remains to be seen. But overall, I think the main indices could be sideways until October. Individual stocks should still, under that sort of environment, be able to outperform, but there'll be many stocks that won't. And got to remember that earnings are starting to contract a little bit in the States. So more care definitely needed from here on in for the next 3 or 4 months. And as I indicated last week, diversification outside of Australia is pretty much a given in my view. The US, obviously there's opportunities there, but it's not necessarily the only place to look, as members of specialist share education know. So just to finish off, there's my contact details if anyone wants to get in touch with me regarding what we do, and I'll be talking to you again next weekend. Cheers.